Joining us right now is Jim Grant. He's the founder and editor of Grant's Interest Rate Observer. And Jim, you've been warning us for a long time that you thought the Fed was doing too much. What do you think of what you've seen the last week or so?
I think it's doing more. On the Today Show yesterday, the chairman was asked whether he was concerned about long-term inflationary consequences of these actions. And he said, no, we're not seeing that just now. And, I know he has to project confidence. That's part of his job. But how many of us, say, as long ago as 6 weeks would have predicted this? The world, of course, is ever-changing. But I think the simple assertion that we see no prospective consequences of these actions with regard to the purchasing power of the dollar is very, very concerning. I mean, I think that is the clear and present danger for creditors of the United States.
Jim, we have not seen business shut down like this ever, this rapidly and this globally. What do you think should be done if not having the Fed step in and take these emergency actions?
Well, I am. This gets us into epidemiology, in which I'm one of the world's leading authorities in not knowing about it. The question, I guess, before the House is whether the cessation of commercial life is worth it. Is there not a trade-off with health and other? I mean, one can die of despair as well as disease. And I noticed that in the FT yesterday, Joseph Wallenberg, the Swedish industrialist, said he just simply wanted to start a debate about the consequences of mass self-incarceration. And I share his concerns, and I think that the way forward perhaps is to, anyway, I am in favor of life going on. And the alternative is to shut everything down and really put the government in charge. That's where these programs are leading. Bernie may or may not be out of the presidential race, but his program is by degree being implemented, in fact, daily. The Fed, to do what it does, people say that we must have yield curve control as we had in 1946. In 1946, we had price controls. The Fed is turning into its own kind of commercial bank. It is now going to lend directly.
Hey, Jim,
yes.
These are desperate times may call for desperate measures, though. And if you're talking about a situation where the country shuts down for a number of weeks or a couple of months, and as a result, it prevents the hospital system from being overwhelmed as all of these people are reacting to a new virus that none of us have ever been exposed to before, if that flattens the curve and means that the healthcare system doesn't get completely overwhelmed, I don't know, maybe I'd take that trade.
Well, the healthcare system has had a couple of weeks to get its act together. There was an op-ed piece in the Wall Street Journal, I think 2 days ago, headline over which is COVID-19 as deadly as they say, and two credentialed scientists argued that current estimates of the fatality rate may be too high by orders of magnitude. Bill Gates was on CNN yesterday saying the exact opposite. Experts simply are not expert in a dispositive way. There's no certainty about this, even as there is no certainty in finance or indeed in life. I say that the cure is prospectively worse than a disease. That is an amateur's opinion. I say that the delegation of political and economic authority to the United States government to suppress this crisis is a clear and present danger. These are opinions. I can't defend them any more than that.
Hey, Jim, you started with down this line of thinking last time you were on. You were bringing up flu deaths and things like that. You just mentioned a couple of scientists. I mean, it's been posited that only economic people have minimized the threat of the virus. But there was that article. Those guys were both scientists from Stanford. There was an epidemiologist in the UK with, unfortunately, the same name as Neil Ferguson, but who had really dire forecasts, and he ratcheted those down as well. But do you think that because you're an economics guy or a business guy that you just can't see the actual threat of this pandemic? at this point? I mean, are you actually biased because of that, because you have skin in the game?
Well, I am the husband of a physician, therefore I am kind of 120th of a physician myself. I try not to think about things purely in economic terms, but there are health consequences to depressions. There are health consequences to unemployment. If we all could agree to drive 35 miles an hour on the interstate highways, that would save perhaps tens of thousands of lives a year. How many of us would sign up for that? And if we did sign up, would we be accused of being automotively centric because we drive? I like to think that the way I've thought about this is to weigh costs, benefits, and my conclusion is that life as it must go on is a precious thing too, and we ought to at least consider what we are condemning ourselves to if we choose to shut everything down for another month or 2 months or 3 months. I think it would be a fatal error. That's an opinion of a journalist.
Hey, Jim, do you have any numbers? And I've been looking for them because there are so many anecdotal stories about what happens in a depression and the health risks of that and the health risks of what they call deaths of despair. You're even looking, even now, in certain segments of our population, irrespective of this of COVID, of life. Of age coming down, meaning rather than going up, we're seeing it go down. But have you seen real numbers that could be put on that? Because I think part of the issue of this conversation is that you're on one side you have estimates of impending potential either death or people in hospitals, but it's very hard, or at least we have not seen real numbers about what happens post a financial crisis in terms of the other health impacts. I absolutely agree with you. I mean, I very much feel that if you think the opioid crisis was bad, that could be a dry run for what could happen after this.
The opioid crisis has a direct, at least connection with this, at least as an analogy. In the early aughts, the medical profession got it into its head that pain was the vital sign and that no one ought to be in pain. And this led to perhaps the drastic overprescription of opioids. By the same token, it seems to me, at least in an analogy, the Federal Reserve has intervened at ever closer intervals to suppress the symptoms of misallocation of resources and the mispricing of credit. These radical interventions have become ever more drastic. And the Dr. Feelgoods of our central banks have worked to destroy the price mechanism in credit. Interest rates are the most sensitive prices in capitalism. They serve to do all sorts of useful things. Discount future cash flows, estimates thereof, to measure credit risk, to set investment hurdle rates. These prices have become administered, government-set indicators rather than sensitive prices, and we are paying the price for that in the misallocation of resources. And so what do corrections correct? That is the question I have with respect to the Federal Reserve and to all these programs and to all of its interventions. Is there no salutary role of bear markets and recessions? Of course there is. They separate the sound from the unsound. They separate from the well-financed from the over-leveraged. And if we never had them, if we never had these episodes of economic pain, we would be much the worse for it.